Everybody in Stocktwits Nation. It is Tuesday, April 8th. Here is Shay Boloor. As always, I am Katie Perry. We got a lot to cover today. Yesterday was quite an eventful day in the markets, which we'll get into. Despite the hype from FinTwit and Cramer's doomsday chatter, the market brushed off the second crash narrative. Sure, VIX hit 60 and a fake headline pumped $6 trillion. That's right, $6 trillion to equities. Thank you, Walter Bloomberg. Before the White House shut down the rumor, overall the S&P only dipped 0.23%. Tech led the charge into the green, which is where we're looking at the present moment. S&P above 5,000, down slightly. NASDAQ 15,603, Russell 2,000, 1,800, and Dow Jones just under 38K. Shay, good morning. How are you feeling after yesterday?
No, I mean, yesterday we've been saying there's going to be somewhat of a relief bounce, even though it's just as a noisy environment. On the weekly chart for the Qs, like this is the most oversold it's been in close to 20 years. It's more oversold than the COVID drop bubble. It's more oversold than 2022 pullback and the bubble bursting. Like this was severe and it was aggressive. So there's going to be somewhat of a relief bounce. And the crazy thing is a relief bounce with how oversold we were, it could be like a 8 to 10% move. And right now it's bounced 8% since the Sunday night low. So again, I don't think we're in the clear until QQQ passes 494, and that's 12% more upside even after this morning's like pre-market gain. So be cautious out there, but there is a trade to be had for the short-term bounce.
All right. Yeah, and I think the big news just for our world yesterday was this erroneous tweet. It was a misquoted Fox News segment. Shay, imagine, I mean, how would you feel if that were you? If you posted something and led to $6 trillion in a shift in the market. Is that like a nightmare situation for a financial creator?
Yeah, confidence, but for sure busted. I mean, I don't know. That would be kind of crazy if you can move equity markets, move trillions of dollars just based on you clicking submit on something. That is somewhat empowering, but oh man,
Not a
hopefully,
situation you want to be
yeah,
in.
definitely not.
Yeah, but you were saying earlier it did signal something, which was that if that were true, you could see what could possibly happen. So I wonder if you think the administration, Trump sees that and they're like, okay, got that in my pocket now. If things start to hit the fan, uh, perhaps you could kind of shoot off a message into the ether and recourse.
Yeah, I mean, I do think it highlights the thirstiness of capital to return back to the market. The appetite is absolutely there. It was the velocity of that move was insane. I think my portfolio had a 10% swing in less than an hour. That's crazy, but it also might indicate to like half glass full, half glass empty would be they kind of want to force the Fed hand still. So if Trump really hasn't like nothing has changed on that front, and that's what's worrisome to me where he wants the rates to go lower. He wants it. So even if we bounce here and there's some kind of delay in the tariff talks, he still didn't get his outcome of what he wants, which is rates being lower. And that's why I feel like this is just a short-term relief bounce. The real issue is still at hand. Fed haven't cut rates yet. And I think there might be more pain ahead. But if I'm wrong, I'm going to wait until 12% more move and then we'll see. But right now, I honestly might be trimming into the ads I did on Sunday night just to raise my cash position ahead of this earnings season because JP Morgan's reporting on Friday, guys. Like earnings season is just around the corner.
Yeah, we're getting a lot of earnings from the banks on Friday. It's also, yesterday we were sort of in the fray of it all, and I feel like this morning there's sort of a step back moment. And a lot of the conversations I'm seeing are around, okay, we don't know what's going to happen in the days or weeks, but it's sort of a foregone conclusion that as long as this administration's in place, the 10% tariff's probably going to be there. And there will be other tariffs in specific pockets of the market, TBD, if it's all of the ones cited or just some of them. And so now I think a lot of business leaders are, like we were talking about yesterday, thinking like, what is the move? Is the move to wait? Is the move to quickly adjust supply chain? And I think those are a lot of the conversations happening. Interesting earnings call yesterday, actually, from Levi's. Levi's had a great earnings call, admits everything. They're maintaining their guidance with the caveat that obviously they don't know what the impact of tariffs will be, but they had positive results. But the CEO, she made some very interesting comments. She doubled down and said, we're not a manufacturing business. We work with manufacturers. So while it is their problem and they would love to source manufacturers in the US, she said it was years and years away. So that was an interesting note that she had. And I think another interesting piece of that was just how there was a little bit of a bright spot in retail. But it goes back to what you were saying yesterday, Shy, about, this isn't an overnight thing where they're just going to flip the switch and people are going to be lined up in factories in the US making jeans.
Yeah, 100%. I mean, I think as a bucket, a lot of these consumer stocks, just retail stocks, just tanked the past couple weeks. So yesterday was a good example of just holding in line will cause a stock to catch a bid from the earnings in this environment. And I do think that it's great to see them maintain their annual forecasts. I'm shocked, to be honest, that they are, because you just don't. Maybe I'm not shocked because they just told me they offloaded their risk in their business where they don't have to deal with manufacturing. So like, it's the third party's problem. But what, do you not think the manufacturers are going to increase their costs if you're going to use them, because you're not controlling your costs in house? You're going external. So
Yeah,
I do believe there is somewhat risk of them increasing the costs and going to hit your bottom line, and you're going to have to adjust your forecast. So it's a little risky.
yeah, and they kind of hedged. Like, it was sort of like what you were saying yesterday. They didn't. They said for now we're not adjusting it. So it's kind of this like, well, they can kind of buy some time and say we don't know for now. For now it's the same, but who knows?
Yeah.
But backing up on the tariff thing, China yesterday striking back a bit. Basent basically saying, you effed up China. You're playing a losing hand. Like, we're coming right back that way. Do you have a point of view? I know China's pumping a lot of stimulus into their economic system. Who does have the upper hand in your view, Shy?
Oh, the U.S. for sure. We definitely have the upper hand. The GDP, the amount that U.S. consumers have weighted towards the global GDP is insane. I want to say it's like 20%. Um, Obviously, the East, China is the sec. It's U.S. and China, but U.S. is clearly the tier one A, and China's the one B. I think that the lever that China has always pulled was a semiconductor chain that is slowly unraveling with the domestic initiatives that we've had in American AI. So, like, in 5 to 10 years, like, who knows how reliant we're going to be on China on that side of the world. But either way, like, it's going to be a game of ego, 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 ego. It's going to be back and forth, back and forth. We don't know the terminal range of how bad these tariffs will get, and that's the worry. We're not working in the sandbox. I made that comment yesterday. It's kind of spiraling in a way where you just don't know what the worst case scenario is, so you can't control your risk because you just don't have that range. So I don't know why Besson said that.
It is kind of
It's
like
weird.
it's getting a little again, like we talk about all the time. It's pro wrestling. The Chinese embassy, I don't know if this was a mistake or what, but they just like tweeted out just at Donald Trump on X yesterday with no other context. It's like, is that a veiled threat? Is it like, I was like, that's something I would do to like get attention from someone. Like, oops, like I tagged you. Like, what are we doing? Like, I so I don't know. I think that was ended up being taken down, but I'm like, this to me is scary. Like, these are adults making very important decisions. And whether that was a mistake or not, I'm like, this is the reality. We're in something like that could set off a chain of global events. And that is insane to me. And not to make light of, the turbulence going on, but this is like something that happens on, Real Housewives.
No, we're living in a reality show right now. I made a joke about that, like when Trump got elected, but it's absolutely the case where things are gonna be like in the slow moving Biden administration. Like, things I think we're now realizing how nice those years were. Where it was predictable. Like maybe things were breaking down under the hood, but like it was predictable. Now, like you just what's happening? This is our reality. It's like right in your face that we got to this point in society where these kind of world moving things that move the world's needle is being treated like a high school gossip game or just some kind of high school environment. And it's like, what happened? Like, what
Yeah.
really what happened? That's crazy over here.
Yeah, it's at the same time there's like things like that happening. You have a lot of business leaders and very intelligent people making very big statements about like where we are in a societal sense. And I'm not sure if you saw Ray Dalio posted an article to LinkedIn, which was very thorough. And he basically talked about this being not don't he's basically said don't get it twisted. This isn't just about tariffs. And he laid out this sort of new world order with multiple factors that are all like spiraling together in this moment. And he speaks to this idea that this is like a once in a generational, once in a lifetime moment where things shift. And it sort of reminds me of like what you talk about with the fourth industrial revolution. One of his key points is on the disruption of AI, but he talks about the monetary economic order breaking down, the domestic political order breaking down, the geopolitical order breaking down, acts of nature, and all of these things in the backdrop of the tariffs, in the backdrop of all this sort of reality show BS. You guys should definitely check it out and read it on LinkedIn. But it is interesting when you have people like this. You know, this is a busy guy. You got he also went on CNBC to talk about it, taking time out of running their businesses in their day to day to comment on what is happening. And I think that's another interesting moment. So you have these sort of frivolous things happening, and then you have these really important people stopping and saying, "Wait a minute, historically, we're in a place right now. We need to pay attention."
Yeah, I think you're seeing myself included. I'm writing I wrote a doctrine over the weekend. I think everyone's just like writing doctrines right now because we're in such unprecedented times where the global trade policy has just never been this disrupted in history. Like I really don't think it has to this level extent of made up calculus is actually going to be affecting billions of people. So I think because we're in such a unpredictable environment, like a lot of people, myself included, dialogue, Ray included, Dan Ives included, like everyone's just writing a doctrine right now of like
Yeah.
what's happening, what's their intake, what's their angle, what's their input. Because if you don't, people might assume that you're sitting dormant on what's happening. You're just not putting too much weight when this is truly historical what's happening right now. So I think it's really important to communicate what your perspective is on it because it's a once in a lifetime type of chess move that's being played that you just have to like be on top of it because things can move very quickly as you saw yesterday and even pre-market right now. Like things are just the velocity of movement is crazy.
Yeah, it looks like we're up 1100 in the Dow. I think what you're saying, Shai, too, is interesting as thinking about as investors, as you guys are listening, and how we as investors make decisions. Obviously, we look at themes, we're interested in fundamentals, but in this moment, I think leadership becomes more important. And so perhaps it's not even an ego thing that people like Dalio and Jamie Dimon are out front getting ahead of things, like sharing their perspective. But believing in some of these companies' ability to navigate means believing in this sort of intellectual prowess of the leadership to figure out how to kind of navigate this new world. And it's not just about you can run a business, you know, very well operationally, executionally. It's do you have like the brain to look ahead, see what's happening and navigate? And that's always important for a CEO. But I'm wondering now if, you know, we had the IonQ CEO last week. I was very impressed by sort of his view of the space. Is that now more important for investors as they make decisions because it is going to be calling a lot of audibles for these companies?
No, it's you nailed it. Where management is or corporate governance is going to be spotlighted significantly. And if you're one of those CEOs who have a track record of twisting the truth or being super vague, that's going to be a no go in this environment because like I'm not saying the Levi CEO is this person,
Yep.
but you're putting a lot of faith in Levi's management saying that they're confident in their annual guidance. in 3 months, if they were just way off sides and aggressive, you're holding the bag because it's gonna get clipped. So it's really important to have the captain of the ship that you're investing in know what the terrain is going to be, and
Yeah.
they can adjust, or your ship might sink, and it might get dinged to an extent where you're never going to recover. Like there's just so many. Like this is a type of environment where it won't just be burns; it might be actual wounds and stitches. Like it's not going to be a band aid. And if you make the bad play on corporate strategy, it might take years to recover from it, not just quarters. And that's why it's vital that you hear every conference call this earnings cycle. Like it's going to be really important. And I do it every earnings cycle, but I think for a lot of investors, maybe you guys don't. You guys don't need to. Fine, great. This you do. You have to sense the tone. You have to sense the content. Who's doing corporate BS, kicking the can down the road? Who's actually like, we have no visibility. It could be like A, it could be part B, laying it out there for you and seeing which companies are actually going to be affected in the near term, which are safe, and going from there. But I don't know. I've been burned from CEOs before, and it sucks because you always invest in it. For me, I invest in a theme. I choose which soldier I want to take me to victory in that theme. But a lot of times, like the Snowflake CEO, for example, Frank Slootman, he was known as the GOAT in software. He was the old man sleeping at the wheel that I found out because he did not believe in AI. He just thought it was like a nice little shiny thing. It wasn't going to be a structural shift that was going to affect multiple industries. And because of that, Snowflake was playing catch up all year last year because they finally got a competent CEO who's AI first, knows his stuff, and now they're investing accordingly. But they treated last year's investment year. And because of that, opportunity cost, when you had a Palantir who did the complete opposite route. AI first. CEO knew AI was going to be as revolutionary as I believed it was going to be, and they capitalized first mover advantage. Snowflake could have done that if they had the right CEO like, guiding that ship, and they didn't. And now you're seeing the price differences between those two stocks over the past 1 2 years. That's a perfect example of why CEOs matter when there's a structural shift happening. And this tariff policy war is a structural shift. It's going to affect multiple industries.
Yeah. I think I want to get into the CEOs leaning into AI because there was an interesting memo came out of Shopify. But before that, just so for people listening, when you're listening to these calls, sounds like you're trying to discern how well they understand what's happening. So they need to sort of prove without being too verbose that they get it. They understand the dynamics and they have a point of view, but they can't necessarily overpromise, underdeliver either. So are there certain like things you look for listeners? Is it transparency? Is it candor? What are the things that when you're listening to these calls, you're like, okay, this person gets it?
A perfect example is Sentinel One CEO. I obviously was listening to their earnings call carefully after the outage, the CrowdStrike outage. So I was like, all right, well, let's see how much near-term tailwind that Sentinel One will get because they're both in the endpoints space in cybersecurity. And I was a little worried that maybe Sentinel One, who is the new hotshot on the endpoint, was maybe going to gain some momentum because they've always had a CrowdStrike problem because nobody left CrowdStrike, and Sentinel One's product is really good. CEOs just touting how they would never mess up like CrowdStrike did, and that was like such a admin related error, and they were like not bullying but digging CrowdStrike down. And then he kept saying they're gonna have some immediate beneficiaries off it, but it was so surface level. There wasn't any commentary. Some commentary I would look for is demand is we can't answer enough phone calls. We're going to be increasing our hiring FTE to fulfill all the demand we're getting. That is something that you can track of like, are they actually hiring people to fulfill all the demand they're getting? That wasn't said. It was just like we're gonna get a lot of demand. That's part one. Part two is um, some more commentary on like the which customers spending 1 million plus if they're incrementally going to spend more, we're getting more of a pickup in that space because CrowdStrike's all the big dogs. Like they're Sentinel One's all the SMBs, the smaller players. So I was like, all right, maybe if they land some bigger whales and they commentary on like what kind of customers that spend million plus are coming onto their platform post outage, that would be something that can be tracked as well. That was not said. So it's really important to find commentary that can be backed by an actual LinkedIn job openings or some kind of KPI metric. If you can't, and it's just like fluff, it's just fluff. It's corporate BS.
Yeah.
It's so that's why a lot of times CEOs just don't say comments that can be backed by a specific metric or a search, and when they and that's how you can tell what's BS, what's not. In my
I think
opinion.
that's such an important point because if you listen to enough of these, you pick up on common language used when they don't have that data. So, our customers, the product's really resonating with this customer segment, but they don't share any data. It's like, well, what is that? What does resonating mean? They open an email, um, going back to your points though about just a belief in AI, Shopify yesterday there was an internal memo that was put out from their CEO, and it was basically kind of resetting sort of how to think about adding headcount. I've been at companies that are very well managed and run, and so this is a normal thing where every now and then you sort of reset your principles around hiring to make sure you're not getting too bloated, or you're not just there's some managers amass headcount for political reasons or other reasons, and so this is a normal thing to do. But it actually got leaked, it leaked is kind of, I didn't, when I saw it got leaked, I was like, oh, this must be bad. And it wasn't. But Shopify quickly noticed that it was getting picked up, and they're very out there on social media. So they just published it themselves and was like, yeah, we wrote this. Essentially, the memo, though, the big takeaway was that the advice they're giving to hiring managers is figure out if AI can do it before you write up a JD for a human being. And this is the first time I've seen this like articulated publicly in black and white, and it gets to a lot of what you've been talking about, Shy. But thoughts on this? Do you think this is going to be sort of the mindset that a lot of these companies adopt, where if people want to add resources, they're going to be asked to prove you need an actual human being first?
100%. It's wild as unfortunately it has to be because the levers of pull for margin expansion when they're getting compressed due to like this tariff war is FTEs. That's like the immediate. That's where all C-suite go. Like we have to pull that lever. Unfortunate, it's out of our hands. And now we have something as revolutionary as AI. You're going to figure out ways to leverage that in order to fulfill the workload while you reduce these FTEs. And I think like I've been very public about the future of enterprises. I really do think VPs will get eliminated. There's no point of VPs. It's gonna be C-suite. You used to have 2 VPs and 5 directors. I think no VPs, 3 directors, and you have a bunch of consultants now on a contracting. I think 1099 is going to be the way of the future. Prove your worth, and we're going to work you to the bone. And if you don't, fine. We don't have to pay you severance. We're not going to have to pay you all these benefits. We'll cut you loose and get someone else in line to fulfill this. And if you do really well after 2 years, you'll become a director. I think it's going to be like that. And managers, analysts, they're done. I
Yeah.
don't think they're just done. So I think that is the future. So if you know that, it takes like 6 months to fire someone. Really, like if you're a Shopify, it really does. Like
And
you have to
especially in
put them.
Europe, it's years.
It's years. Like it, you have to, even if they really mess up, like you have to put them on a 6 month performance review plan. You then have to make them like prove like, all right, is it like, can you recover from this? And then at that 6 months is then when you can like maybe have that they're off probation and you put them on probation then, and that's like 2 months, and like next thing you know, like you have to like they should deserve to be fired. It's 10 months later, you're still paying for them, and then you have to give them a severance on top of that after 10 months. Like you want to fire them, it does not make sense fiscally anymore in this post AI world, and that's why I was like, capitalism is about to get brutal in the agentic AI future we're about to enter, and that's why a year ago I was just like, you need a sprint to build something for yourself now because it's not a jog anymore. The wealth the wealth of gap is going to widen between like the rich and the poor, middle class. Um, you're gonna have to be a utility player. You have to do something with your hands that can't be replicated from AI, or you have to have some kind of control on eyeballs, or you're gonna have to do something that is somewhat of a niche that you're protected because a lot of corporate jobs are going to be replaced. Like I don't know, I see high schoolers these days. Like I don't know what they're gonna do in 6 to 8 years when they graduate. Like what's going to happen? Like,
Yeah.
y-
That's why they all want to be
it's dangerous.
TikTokers. I
Yeah,
think
I mean, eyeballs.
Yeah, I think everything you're saying is so interesting because sort of today we talk about AI, a lot of the conversation is AI becoming more human-like, but it's almost like we're becoming more like tools. So like to your point, if we're no longer an FTE and we're a 1099, that puts us as a line item on a budget right next to Monday.com, right next to any tool really that you could pretty much get on and off at any given time. And so, yeah, when you think about looking at people in a company as tools and just pure resources, you strip away personal development, you strip away culture, all these things that a lot of studies show matter. But if we're in this new era where a tool could do it or a human could do it, like you better prove that a human being has to do it. We just kind of fall to the level of the AI versus the opposite. And I
Well,
think this shows it, and I guess it's a little like dark, it's a little dehumanizing, but to your point, this is the reality. This is where things are going, and you could either, throw your arms up, or you can look at it and say, okay, what do I got to do personally? But that I think is fascinating. I even, I'm a 1099. I run my own business, and a lot of times I can get clients because I'm not, they don't have to onboard me, they don't have to train me, I don't need to go
totally.
through any processes. It's like turn me on, turn me off. And that works for me personally because that's how like my business is set up and that's how I'm economically set up. But if you, it's such a shift from like I'm working at a company 20 years, I'm building my pension, this is my family, like this is those days seem just over in
Well,
many industries, specifically tech.
no, I mean, I interview a lot of people with my job, and I also do some mentorship programs. Like, my biggest thing I tell them is like, I don't care if what your IQ is anymore. Just get to 70% of being capable. It's all EQ. It's all your emotional intelligence. Like, that's what's going to be the needle mover in the future. So like, if you're smart enough, I just care if you're smart enough. And if you have a high EQ, I can mold you into something that can be a great performer. And what I mean by EQ, emotional intelligence, be able to read a room, be able to have a narrative on some digesting data and having a narrative, being able to communicate to leadership in a really effective way that's not just noise, it's tangible, actionable insights. It's being able to not be a bad agent in the work environment. It's being a good team player. Like, there's all these soft skills that were nice to haves the past decade. They're actually going to become a hard requirement. And I think that transition is going to be a psychological onboarding issue for a lot of folks. But you need to learn those soft skills now, or you're going to be left behind. And that's something that I think public speaking classes were like, oh, like that's fun. It's just nothing. It's like not math or science. Like, I think that's going to become much more of a weighted priority in the future than, I don't know, a math class, for example. Because like, what do you really need to do? I took 3 years of calculus at university. I got to the level of like rocket science calculus. I'm doing nothing with my life regarding calculus at all, and AI can just do it for me now.
Yeah, sometimes it is the learning process more important than what you're
Yeah.
actually learning. Let's flip back to what's going on in the markets because there was some news while we were chatting. Looks like White House saying they had a quote unquote great call with South Korea, and they're saying China wants to make a deal. Exactly what you were saying earlier, Shy. People are so thirsty for any morsel of great news. Things have jumped up significantly. The Dow futures are up 1,200 points. S&P up over 3%. There's the opening bell right there. NASDAQ 3%. Is this sort of corroborating what you laid out at the onset of this show, Shy, where like anything positive, people just like they need it, like oxygen, they're gonna jump on it.
Yeah, 100%. But I think people need to be grounded in reality. These are words. Nothing really has changed. And all it takes is just one tweet or comment that bucks this narrative of the deal is gonna be fixed in the near term for this to crash. So be cautious out there, guys. Like, the even though we're up significantly today, like we might be even up 5% today, fine. But I won't be bullish until Q's clears like 490. I think that was the range I said, 495. Or we have structurally in writing that the tariffs will get delayed 30, 60, 90 days, or that there's some kind of negotiating that they've met in the middle. either way, like we're still in this mess that's not changing at all from last week, except the narrative is following price action right
Yeah, in writing, not from Walter Bloomberg. He's in timeout. We are gonna bring in a super special friend of the show, Austin Hankwitz. He is one half of the Rich Habits podcast, which you all know and love. And Austin's here to weigh in with us on everything that's happening and everything he's seeing out there in the market. Austin, are you with us?
I am, but for whatever reason, it seems like my camera's not wanting to
You're an
participate.
invisible guy, right?
Mm,
Whoa.
that's
You
not
got that
good.
new invisibility tech that I saw
Yeah,
where you
man,
pull
that
the
Harry Potter cloak is just really doing me great here. Um,
good thing you got a voice for podcasting. You have that rich, deep voice that you don't even
I
need the
appreciate it, but
visual.
this is not cool. I
Yeah.
have no idea what's going on. I'm sorry. I just tested it earlier and it was working, and now it seems like I guess because I don't have like the producer sort of
Ah,
rights, I can't manually toggle my camera on and off. So maybe someone
okay.
behind the
Well,
scenes can try and toggle my
yeah.
camera on and off for me here. Okay, so
Oh,
now we're off. Maybe we go back on. Weird. I'm not sure what's going on there.
well, luckily we can hear you and we have access to your brain, which is the most important thing, although we always love to see your face, Austin.
Well, I even wore my
Um,
green t-shirt today, like I always do, because
no.
that's like the thing now. I come on the Daily Rip, I wear my green shirt, and I cross my fingers
Yeah.
for a green market, and we're getting a little bit of that this morning.
So I don't know if you see the comment here from our lovely producer Keith. Camera input not syncing. Something off with that. If not, we'll just roll. We'll just,
Let me
Shy and
try
I, we
plugging
can
it.
go camera off in solidarity. We don't care. This is live TV. Like we'll
Yeah,
just
let me
do it
do a
live.
quick unplug replug action, and then if not, we're just gonna rock and roll. How's that sound?
Okay, sounds good, Austin. All right,
now. I mean,
Shy.
it feels like he was. That's my subconscious talking, like that voice,
I
the
know
darkness.
he's
Like it's just like.
voice of God. Um, Poor Austin. You
All
know
right, we'll
what?
see
That
if that
happens,
does anything
guys.
here. It should. Maybe it'll pop back up. But regardless, it seemed like you guys. I was kind of tuning in here for a second. The Nasdaq is up 375 bips at the moment. Rolling higher right now. And Shy, you're kind of still on the sidelines. You're like, guys, I'm not falling for this. It's not something I want to be a part of.
No, I mean, I added significantly in the past week or so. I went from 18% cash to 5, but like I'm I'm definitely might be trimming in this like, strength, and I think we're gonna have more of a bounce. Like I think it's not just today. I think we actually might be bouncing till the weekend, and then people are gonna sell off because nobody wants to hold over the weekend with who knows what's gonna happen. So I just think that I hope people don't add now. Like, oh, the market's up 3%. Like things must be like much better than they are. Like the tariffs are probably gonna get removed, and that's the trap. I think I still believe. I really hope I'm wrong. I really do. Trump wants to force the Fed's hands for rates cuts. That has not happened. A lot of people are going to be trapped in this bounce, and now and I think there's going to be a new low in the market in Q2, and because people are trapped, they're going to be off sides on it, and capitulation will occur. So I I don't know. I hope I'm wrong. I really do because I think Q will go to 380. That was always my level. I was like, I think it's going to hit 380 or SPY is going to hit. Let me see my SPY level. Um, yeah, I said SPY is going to hit 460 to 465.
Mm-hmm.
So
Mm-hmm.
I still think we have a newer low ahead. But if I'm wrong, great. I'm 95% invested. And if I'm right, I need to probably raise some cash ahead of the earnings season because I don't know, Austin, what do you think is going to be more of a spotlight in next month? Earnings season or tariffs?
Tariffs, 100% tariffs. I mean, think about it. At its core, and this is kind of something I wanted to talk about too, right? Because like, you know, I'm not saying now, to your point, Shy, is the time to jump into the markets and get bullish again, but we're also seeing some very interesting valuations across the board. Google, for example, is being priced as if they're going to go bankrupt, trading at only 14 times forward operating cash flow. It's now cheaper than it was during the COVID crash. Think about that for a second. The world was ending. No one wanted, anything to do with stocks during COVID. And now Google is cheaper than it was back then from a valuations perspective. And now the same thing with Amazon. It's only trading at, its priced operating cash flow as well is trading as low as it was back in 2009. 2009. And so, like, to answer your question, Shy, I think that, you can have these companies that are reporting strong earnings with guidance and all these incredible things that come with being a large multi-trillion-dollar company that is profitable and printing cash flow for their shareholders. But if these tariffs, if this policy uncertainty, if all these things are happening behind the scenes, it doesn't matter what the underlying company is doing. And we kind of saw this, I think it was maybe Friday. I was in Canada this last week, so I apologize if I'm not exactly sure on the dates here. But we saw just a blanket sell-off when it came to the markets, right? It didn't matter what the name was. It didn't matter what sector. Everything was down 5, 7, 10, 12, 13%. And so despite what I think will likely be a better than expected earnings season here for Q1, I think the attention instead is going to be on the tariffs, the uncertainty, what Trump is going to tweet about, things of that nature. And also for everyone, it's like, who is this magical voice coming out of nowhere? Sorry, I couldn't get my camera to work this morning for some reason. I tested it even before this and it worked, but
I feel like we should just make the hero image like a giant photo of Austin the whole time.
I'll take
Like
it.
that will
I'll
not be
take it.
awkward at all.
Yeah, just a big
Um,
zoomed in picture of my eyeballs or something, right?
Austin, when we used to do the show together, my friends called you Clark Kent.
Oh, I'll take that. I'll take Clark
So
Kent.
you could picture Clark Kent, you know?
Yeah, a little
Or just
nerdier
follow him.
version.
Yeah, follow him. Oh, there
There
he
it is.
is.
There I am.
He is. All
Boom.
right. If only we could like animate your mouth to move. Okay,
Yeah, we use
I'll
some
like keep
AI
going.
or something, right?
Yeah, we'll
Some
figure it out.
of that Chat GPT video stuff. But on this notion though, is like I just really want to emphasize, right? Google's sitting on $95 billion of cash. They're not going anywhere. So why are people pricing them as if they're going out of business? And that's what I really want people to understand right now is like the market is blanket selling everything, just like it's blanket selling buying everything today. Like nowhere really seems to be safe. But I do want to also emphasize all the glitter is not gold. For example, American Express, as you guys probably have seen, their stock price went crazy vertical, I'd say, over the last 6 months. Yeah, AXP, I think, is their ticker. American Express went crazy vertical over the last 6 months. And then over the last, call it, several weeks here, their stock is sold off dramatically. And their PE multiple went from 22 times, which was crazy overvalued at its peak, now down to about 16. But even though they've experienced this dramatic sell-off from those recent highs, their long-standing PE multiple is closer to 14 and a half to 15. And even in the bear market of 2022, it got all the way down to 12. And so like people might see these sell-offs happening around the market and they might get excited about, oh my gosh, I get to get into American Express now at like this lower price. But just know that like just because it's a lower price right now doesn't mean, historically speaking, it's a good valuation to get into because some of these names were so overvalued, just call it, 8, 12 weeks ago.
Yeah, we got American Express reporting in just over a week. They're going on April 17th. So to everything you were saying too, Shy, I think it was Austin. I was asking Shy a few days ago of like when will we kind of know how bad / not bad this is? And he was like, let's follow the earnings. That's gonna be what do you expect, like Shy or Austin, that AXP or just in general earnings season with companies like this, to Austin's point, that was on a great run and then got cut off at the knees?
Well, I think it's. I actually want to go back to like Google before we get, because I think Google in this earnings season will be really important as well. And Google
And
is
don't
one
give
of
me
those
that, Shy.
interesting
Don't give me that
battleground
stuff with the
stocks.
Chat GPT stuff, man. Like, we're talking about
No, no, no,
Google
no. It's
here.
gonna be it's gonna be a very balanced take. So Google, clearly the reason Google's trading so cheap or undervalued is because the cannibalization of their search business is at risk with AI. Like I think that's why there's a narrative problem with Google. It's the same narrative problem that Nvidia has right now with their training data is gonna be cheap, hardware business is gonna go down. So I think like Google is like I think Austin, you agree. Google's going through one of the most complex pivots in its history, which is maintaining its dominance in search while also trying to position itself for the next generation of computing. AI, but AI is also going to be affecting their search. There's a balance right now. But I do think Google's in a really great. I think the market's focused too much on the headwind of its search business and not enough on the structural tailwinds that's coming from their infrastructure layer and also their cybersecurity stack via the
Mm-hmm.
Wiz acquisition if it goes through. So like there's no denying that AI is going to become a real challenge through to the traditional search model. Like yes, it might go from 95% market share to 90%, but that 5% delta will hit their bottom line. But like this also isn't just about chatbots stealing a few queries out there. It's about a potential structural shift in how users seek and interact with information. And in self-searching, they're like myself included. I know a lot of my friends like they just ask agents to find, compare, and even transact what the service like transact what's the information they want to know. So that's going to cut the monetization surface, in my opinion, of ads and reshape click-through dynamics, which is essentially the bread and butter of Google. But the more LLMs that extract away from the service search experience, the more it's hard to justify what their future margins will be and their fundamentals. And that uncertainty is why it's trading so undervalued. So that's a risk. If you disagree with that, then this is an incredible opportunity. And I do believe that Google's position really nice in the agentic AI future we're about to enter. And I think that nobody really knows the one-to-one headwind to tailwind, but if it's one-to-one, this is going to be substantially higher. And I think that's something that it's worth the risk. Almost. It's like it's getting to that level. It's becoming so undervalued that it's priced into the stock almost right now. And it's okay to say like their bread and butter is going to be cannibalized by AI, but also know the other end of like how they're going to have structural tailwinds of it, and it might be one-to-one.
Yeah, no, I'm right there with you. I guess the only thing I'd want to jump in on additionally here is like, what about Amazon's case then? Right? Amazon is trading at a operating cash flow multiple that it hasn't seen since 2009. And I don't know about anything that's like around the corner to disrupt Amazon when it comes to their like core business, right? Like AWS is still rocking and rolling. That's obviously how they make most of their money.
Totally.
So like to your point, I totally agree. Like there are underlying shifts that are happening for Google that are making investors be a little bit more uncertain. Therefore, that they want to get into a, they don't want to have such a high valuation multiple when they go buy this stock. Totally agree with that. But I would argue you can't make that argument for Amazon, right? So it's like that kind of then goes back to this idea like we're just seeing such blanket selling happening across the markets, no matter, the name in general. So full transparency, I bought a little bit of Google yesterday. I put $250 into the stock, and same thing with Amazon. I put about $250 into Amazon as well. So yeah, it's at that point now where it's like you could argue that, of course, absolutely, any of these names that we're talking about right now could go down another 10, 20, 30, 40%. We all remember COVID. We all remember the 2022 bear market. It was wild to see some of these names go down by 60, 70, 80%. And you're like, oh my gosh, why is it still going down? But I think having that like long-term viewpoint when it comes to investing into these companies and knowing that, yeah, like, despite these short-term uncertainties, I am a long-term bullish investor into this underlying thesis of, Google's business or Amazon's business, Nvidia's business, however you want to, describe your sort of portfolio there. So, yeah, I'm right there with you, man. I just, to your point though, I'm cautiously optimistic in the short term, but I do think that over the next 18 to 24 months, we will see all of this and be like, wow, I wish I bought more.
Yeah, I think
Oh,
you're both.
totally. And
Go ahead, Shy.
okay, go on. No,
I was.
I was just gonna say regarding.
You go.
I mean, regarding Amazon, Amazon is my top position. I've been adding, and I think it's really important. Like the quick color I want to make on Amazon is like they're not immune to the higher import duty. Like they're going to be affected by the tariffs. I think that's what's in their narrative of discretionary spend might get cut due to all the tariffs outcome, and Amazon's going to hit, especially on the retail side, where a significant portion of its third party marketplace is kind of dependent on Chinese manufacturing. But unlike companies that rely on external freight carriers or some kind of warehouse partners, like Amazon does control every step of the value chain. And that's really important because that control means optionality. In this environment when the goalpost keeps getting pushed out, optionality is at most the biggest weight of the anyone's competitive advantage right now. They can subsidize pricing on select SKUs, or they can lean into the US based fulfillment centers that they've invested significant amount of money over the past decade for faster domestic rerouting, or some kind of shift seller incentives to encourage nearshoring without like having to disrupt all the user experience from the Prime members. Like there's a level of agility right now that almost all competitors just simply don't have. And that's just the e-commerce side. I'm not getting against the AI side, but like again, it's really important to know the full picture and not just to treat it as a narrative false price action when you see Amazon dip 30% in like 2 months. Sure, it should deserves to get hit a little, but just also be fully aware that Amazon controls every step of the value chain. So there is optionality, and optionality is vital.
100%. And I guess the other thing I just want to share, if we reflect upon Katie, unfortunately you weren't here, but the first time I jumped on the Daily Rip with Shay and Jordan, we talked about an ETF called QQQH. And this was the, excuse me, the NEOS NASDAQ 100 hedged equity income ETF. And essentially what it does, it's invested into all the underlying holdings of the NASDAQ 100, but they sell covered call option contracts, roughly 3 to 5% out of the money, then use some of that premium to buy puts on the NASDAQ, offsetting, potential downside risk. And what's cool is year to date, the Qs as of yesterday when I was doing this research were down about 17-ish%, whereas QQQH is down only 10%. And that 7% delta, again, were those put options that were coming in to help support some downside risk. So as we've got now thousands of people listening on Twitter about all the cool things we're talking about here, if you are someone like me who wants to continually be investing, buying the dip, dollar cost averaging, things of that nature, I think QQQH would be a really interesting name to add to your watch list because, again, you're owning all the underlying constituents of the NASDAQ 100 and you have full exposure to that, while also sort of implementing a downside risk strategy when it comes to buying some of these put options. I think it's like 10 or 12%, in the money. So definitely check out QQQH. It's something that I've been sort of buying throughout this year and really excited I did, obviously, with the 7% delta, negative 10% versus the negative 17 when it comes to the Qs.
Yeah, I think the conversation you were having, you guys were both making important points. Austin saying don't kind of fall victim to like this blanket sell off across everything. But to your point, Shay, some of these businesses are facing existential threats. I think the one thing I'll call out on Google is, I don't know if you guys saw this, but they just sacked their former head of Gemini. So there's obviously frustrations there, or they're looking to make a shift. And similar, Apple also kind of struggling in that front. And the other thing about Google that I think is interesting is when you talk about Google's search market share, the 98%, whatever it is, GPT is less about taking search share, but it's like creating a new category entirely. So the total volume of internet searches is going down in favor of other behaviors interacting with these AI tools. And so Google might always have they might have 99% of search share, but that TAM statistically is going down, and there's a new category being created. And something I think that's interesting is a lot of those players are privately held that are owned. You got the Anthropic, the OpenAI, like those aren't public companies. And so it's an interesting moment for investors to watch that shift and say, okay, I see this TAM going down, but like I might not even have access to get to these pure play players yet. And that's interesting to me, as most of those companies, I mean, I don't think there's a major pure play AI consumer. Is there a company that's publicly traded?
Not that's on top of mind, but that's actually something I'd love to get your perspective on, Katie, which is like, what's your take on like some of these companies staying private for longer, right? Tesla IPO'd at $2 billion. Now they're a $1 trillion company, essentially. You think about like the OpenAIs that just raised, I think it was at a $300 billion valuation. We've got SpaceX at a 300-something billion, 400-something billion valuation. What's your take on these companies staying, private for longer?
I think there's two things. One, they obviously are well capitalized. The second, though, is the innovation in financial technology, where there's a lot of ways you can actually invest in some of these. There's secondary markets. There's things like the ARK Venture Fund. There are publicly traded bundles of, you could trade in on like a SoFi pretty soon. You'll be able to invest in a basket of consumer VC companies as a retail investor, and they're looped in with Apex, which is sort of the Apex is sort of the underpinning of a lot of these fintech platforms. They fractionalize the assets and make it really easy to transact. And so not very long from now, you'll be able to say, I like this CPG startup and invest on a Robinhood or a SoFi or a Public directly. And so I think that changes things a bit, because the public markets was how regular people got access to these companies. But now that the technology is advancing, it might not have to be publicly traded for someone to have that same access. And so I think that's changing really rapidly, and something to watch. And a lot of what I've been, reading, and especially what we'll see in times of volatility, is when the public markets are volatile, people are looking for alternative assets, and it's just becoming easier and easier. There's even legislation that's been put forward to revise the accredited investor guidelines. And so I don't know if they're going to, to your question directly, Austin, I don't know if they're going to need to necessarily, if you can reach that same number of retail investors at scale, not being a publicly traded company.
Mm-hmm. Mm-hmm. No, I'm right there with you. And, speaking of these CPG brands, Poppy over here getting acquired for like $2 billion. I mean, you're totally right. I would have loved to. I drink the stuff all the time. I would have loved to own equity in some of these brands and these companies. And, as we talk about privately held companies in Google, right? Apptronic, I think, raised $160 million, the humanoid robotics company from Google. So there's a lot of privately held companies that are doing some very interesting things, especially as it relates to AI, humanoid robotics, search, everything in between. But something you said that really, really made my brain go, wow, was I didn't think about, to your point, this idea where the search that comes with just online search, the TAM is going to get smaller as more and more people look toward using the Groks, the Chat GPTs of the world to do their search. That was really eye-opening to me.
Yeah, the monetization too is totally different. So Google, I mean, that's pure advertising. There's seasonality. They have decades of data that shows when certain things are happening in pockets of the industry economy. They can. There's a lot of, to what Shay was saying, there's a lot of predictability there, growing at a steady pace. Like, they know if a certain amount of VC dollars come in, that segment of their advertisers is going to go up a certain amount. This move to the other stuff, that's subscription, that's way different. And I think that's Google might, blow it out of the park. They might crush it. They're Google, but it's very different than being an advertising business. And that's what they've been doing since, forever.
Totally agree.
Are you guys still Googling a lot, or are you mostly going into?
No.
No?
It depends. I think it depends.
That's true. It does depend.
When do you Google versus use a tool?
I'm going on Google if I need someone's contact info, if I want to go to a website that I know already exists, if I want to get directions, because I can Google Maps, right, just real quickly like that. For example, I had to call my bank. I didn't know their phone number. So I'm not going to ask Grok what the phone number is of my bank. I'm just going to type in the bank I use and then contact us, and then the contact us page pops up first. So that's a situation where I'll use Google. But when it comes to for example, I'm sitting on 350,000 points on my Chase Ultimate Rewards card or whatever, right? So I've got all these points, and so I went to Grok last night and I was like, hey Grok, build me a super cool vacation that I can use these points for and really enjoy myself. And so Grok's like, hey, cool, how's it going? This is fun. And gave me a 12-day vacation with different specific flights and the different points and all the crazy things about that. Google couldn't tell me that. Google's not smart enough to tell me that, right? So I guess it really depends. If I want to find, I'm now thinking like in now as I like reflect upon it, Google has become sort of a yellow pages of sorts in my brain where it's like if I need to look or find someone or something or a business or something I know already exists, I'm looking to Google for that information versus if I want like straight up intelligence or advice or perspective or knowledge in general on a piece a topic, then I'm using the chat GPTs and the Groks of the world. But would love to get y'all's perspective on that too.
No, I mean, you're right though. If you want some actual company specific information, like I would for sure go on Google. I think for fact checking, I used to Google fact checks a lot. That's my
Mm.
biggest thing where I was like, oh, is this true? Or what do you I dug into I researched more about specific current events on Google before. Those days are behind me now. So I think that's the psychological change that's probably happening accelerating right now. And to go off with Google, like Google got priced like they were a monopoly before. The other structural tailwinds I called out, like the AI and like cybersecurity, that's not a monopoly. That's a massive competitive advantage they have, presence, but nobody else could do what Google did on search, and that's why it's like, oof, that
And
if that monopoly is over, like what happens?
the behavior you guys described is like exactly the existential threat because Google ads work when you're not sure of what you're looking for. And that's when, boom, an advertiser is bidding against what you're searching for to pop up. So, like in your case, Austin, in the past, that might have been the points guy buying ad space. You click it, you sign up for some program. That's how they make money. So, if you just use Google as a conduit to a website, you're not going through the ads and it is just like a glorified yellow page. I think that is the big thing. Like Google ads work because you are capturing someone at a point where they kind of know what they want, but they're not sure, and an advertiser can get
Yeah.
in there with a lot of intent. If you have the intent as the consumer, you might not click a paid ad there. You might just go to the website. And so I think that's the interesting thing they got to figure out. It's like, I don't know, will there be paid ads within these Gen AI tools? Maybe. Google would be great at that. But do people want that? So we could have a whole show on Google, but it is interesting to think about like what you guys were saying, like your day-to-day activities and backing up, be like, wait, what is the business impact of this at scale? Yeah, it's fascinating. Let's do one more check of where we're at in the markets right now. It looks like we are rebounding still. So Dow up about 3.38%, S&P up 3.5, NASDAQ 3.9. How you guys feeling going into the day? We'll
I
start with
feel
you,
a
Austin.
lot better than I felt yesterday when, or rather Sunday night when the futures were pointing to negative 4.5%. Um, yeah, I don't know. I think again, dead cat bounce, sell the rip opportunity. I agree with Shy and Katie here. I think we're going lower. I think there's going to be a lot of turbulence in the coming weeks and months as more of these tariff conversations shake out. I think Trump this morning was talking about how China really wants a good deal, but they just don't know how to start the conversation. It's like, okay, so we'll see. There's a lot of stuff to consider here. But at the end of the day, the most important thing for people listening to do right now is to have a watch list. They have names that they want to buy at specific prices, and they know why that price makes sense to them. If it's a valuation perspective, if it's a growth assumption, whatever it might be. I've got a watch list. I'm sure the two of you have watch lists that you're saying, hey, I want to buy this stock at this price. And I really want to encourage people to have the discipline and the wherewithal to stay invested. You know, the only people that get hurt on the roller coaster are the ones that jump off early. Have a plan and stick to it.
Shai, your thoughts? We'll let you close it out for
No,
what is hopefully a green day for all of us.
I will say tariffs go into play. I'm air quoting tomorrow. We'll see if it gets delayed. So there is somewhat of a risk. Just keep that in mind of a intraday fade of profit taking. But yeah, I mean, I just said that SPY was oversold at 20 on the weekly, 25 on the weekly charts. Now they're at 35. So the mean is usually like I think around 45 to 50. So like this is a great recovery, or it's not over, but not wrong. There's no real issue taking some chips off the table to see how tomorrow's going to play out because tomorrow is tariff day. So we'll see.
Tariff day. All right. Well, we will be back tomorrow at 9 a.m. Eastern right here. As always, you can get answers in Stocktwits. Click on the what's trending, listen to earnings calls. To Shai's point, listen closely to those earnings calls. And we will be here tomorrow to figure out whatever's going on tomorrow. So thank you everyone for joining in, and we'll see you next time.
Thanks, everyone. Sorry my camera sucks. Until next time. Bye.